And then you can conduct transactions peer-to-peer. So you're not, there's no central authority that has to okay, transactions. And then the fourth criteria is that it doesn't represent an entity. And as an example, I just use one of the Filecoin as a use case some people in the space would be familiar with. If Apple created a storage system when they were launching iCloud, then they called it CloudCoin. It would be very clear that you're not buying shares of Apple. You're buying storage, a commodity, and you're trading the value of that commodity and the right to the files with a token. So they actually have a subscription model. They just didn't tokenize it. So if they were to have tokenized it, this would be very clear you're not buying a security in there. And I think the other big thing that the Token Taxonomy Act does is it creates a custody standard. So you can, hand off custody, and you can know that, your financial institution can, be a clear custodian of the assets. That's key for individuals and for corporations who maybe want to use a treasury function. MicroStrategy famously, made a big treasury play this year. Turned out really great for their treasury. And then I think the last thing is a de minimis tax exemption that just complies with other currencies, which is, when you move, let's say you're going to go to Europe and you're going into London first, you're in pound sterling, and then you move to euros, and then you come back to the US. As long as that all nets out to less than $600, then there's no tax obligation. But you, of course, have to track it. And so that creates a complication. I'd love to have a different standard, but that applies existing law to the technology. And those are the three core components of the bill.
I think it's really important to look at this bill as essentially, it just creates the clarity for innovation and for competition and for lots of growth in the industry, instead of actually putting a lot of regulatory control around it, which is what I think we harken back to the early days of the web, that's essentially what the government did then. It restricted itself from actually creating all of these, regulations around how the web was going to develop. And when you think about a decentralized network, and particularly those that are focused on the permissionless and very similar to the web architecture, that's a public good. And very much in the same way that we are used to now thinking of the internet. When I was at Mozilla, we talked about it as it's not just a public good, it's a public right for us to have access. And so it's just an interesting, and that's what I think the Token Taxonomy Act is really trying to do.
Yeah, it basically says, look, no matter if you get it right, if we get the definition on security right, no matter how badly the SEC wants to come and deem you a security, if you meet this criteria, they can't. So then you can have certainty about your product. On the other side, if you can't meet that bar, well, then either change your product or your path to launching is through the SEC. So if you've got then hey, I can go through here. And frankly, it'll clear some of the backlog so the SEC can focus rightly on those use cases that really should stay within their jurisdiction. And while I would massively update any number of securities laws and make it way easier to raise capital, and frankly, I would basically end the accredited investor thing so that only the special people get early stage deals. I would love to end that. This doesn't do any of those things. It stays pretty minimal. And it's just neat that Congress did largely get it right on getting the internet, because the internet could have just as easily launched in France, but it didn't, because the United States got it right.
Okay, so I have two more questions from the audience. One is, what is your guesstimate on when we will see more clarity here?
Wow.
Crystal ball.
I was encouraged by the last two FinTech Task Force hearings.
Me too.
And frankly, I spent 3 years trying to get to that point in committee. So we'll see. If I felt really good about the work Brian Brooks has been doing at OCC, and I feel pretty good about the progress we've been making with key people inside Treasury and the SEC. Potentially, a lot of the executive branch is going to shuffle, right? It looks like that's way more likely than not, right? Mm-hmm. Yeah. At this point. So how fast that will change and who are the key players and their views on this, they're pretty widely divergent. So as an example, if Janet Yellen is the Secretary of the Treasury, we'll see what her priorities are, but she, safe to say, has a different view than Brian Brooks does about the right way to regulate some of these things. So I think a lot is potentially not going to be settled until summer in terms of key people being in their new roles, and then where are they going to land on some issues. And unfortunately, while this area is so critically important for our country's future, right now it doesn't rise to the most important issue. So there are inherently inside Treasury going to be a lot of energy spent in the next few months on what to do about our state of our economy related to COVID and the shutdowns and the impact on the macro economy. And so it may take quite a while before this really gets elevated to the right level to get the attention it needs.
Okay, and one final question. Will Ohio be the first state to send stimulus checks on Stellar's network? Yes, I am in Ohio. That is. I won't make you.
I don't get to do much with Ohio policy, but if I had it my way, we would close the gap with Wyoming and overtake Wyoming as the most crypto-friendly state. Wyoming's definitely outperformed the other states in providing the regulatory clarity. So I would guess that you're more likely to get the state of Wyoming to move some of these things. And who knows, I'll put in a good word with Treasurer Sprague on the logic. I can't really push for any one company, but we were the first state to accept crypto for payment of your taxes. And that was under the previous treasurer, Josh Mandel. Unfortunately, down the road, they found that he didn't actually have the authority to do that. So they've since revoked the ability to pay taxes in crypto. To me, that wouldn't be a good use of my Bitcoin. But some people,
right.
It's probably a better use than buying a pizza with it, right?
Well, thank you so much for your time. I'm honored to have had this conversation with you. I always find these discussions really engaging and helpful. We are here at the Stellar Development Foundation to support what we can, so let us know what we can do. Thank you for your time. Thank you for your attention to all of these issues, and grateful that you joined us today.
Yeah, thanks for inviting me. Thanks for spreading the awareness, and really it's exciting to see what you're doing with Stellar. So, best of luck to you all and your whole team.
Awesome. Thanks so much, Congressman. Take care. Bye-bye.
Bye.
All right. Well, thank you, Danelle and Congressman Davidson. I agree that was a really interesting discussion on the likely road ahead for blockchain technology in the US, looking at it from a policy standpoint. And certainly it's great to have someone with such informed insights like Congressman Davidson as part of this community. So I'm feeling optimistic, but we would love to hear your thoughts and feedback, which you can share in the top right-hand corner of your screen in the feedback bar. And we are going to have a break right now, and we'll be coming back with our next panel discussion on reinventing remittances. So we'll see you then.
folks, my name is Emily Donald, and I'm the one and only recruiter here at SDF, which means I have the privilege of speaking with every candidate who applies for a job with us. I joined the team in June of this year, and despite not having had the opportunity to meet my colleagues in person yet, I feel very much a part of the team. Our culture is one of user focus, accountability, respect, tenacity, and camaraderie, which shines through in each of our interactions. I'm inspired by our mission of global financial inclusion and believe we have the right technology and team to bring it to fruition. I'm personally looking forward to expanding our team across departments in the coming year and seeing how SDF's strategy develops to meet the needs of the growing ecosystem. Thanks for joining us at Meridian. We're excited you're all here.
All right, welcome back, and it is quiz time once again. And this next one is a bit of a toughie, so good luck. The question for the quiz is, what was the root account seed before we had a network passphrase? Your options are, you can plan for a change in weather and time, all my life my heart has been searching, or nothing ventured, nothing gained. Good luck, and we'll be back in just a minute with the answer. All right, welcome back, Meridian. And if you took our last quiz, I've got the answer for you. The answer to what was the root seed account before the network had passphrase is, all my life, my heart has been searching. If you got that right, I certainly applaud you. And who knew the SDF, the early SDF team was so poetic? I'm looking at you, Jed. So next, we're going to be turning to remittances. In 2019, the total value of global migrant remittances was $554 billion, supporting 800 million people. It's clear that access to remittances is critically important, but that the current infrastructure is still primarily cash dependent, slow, and expensive. So what happens when we see remittance companies apply some stellar innovation to this problem? We've got a great lineup of guests to talk about this, including leaders from Flutterwave, Tempo, and Parahub. And they're going to be sharing what they've been doing on Stellar and in the global remittance space. Boris Reznikov from SDF's business development team will be moderating the discussion. And Boris, I will now hand it off to you. Ooh.
All right, thank you everyone so much for joining us today to discuss the important topic of remittances, which of course is a big part of the economy and is near and dear to many of us in this industry. I'm thrilled to be joined today by three esteemed panelists. As Lisa mentioned, we have Omosalewa Adeyemi, who is head of expansion at Flutterwave. We have Surin Irian, Managing Director and CEO of Tempo Money Transfer, and Ian Ocampo, CEO of Parahub. And I'm Boris Reznikov, Director of Business Development here at the Stellar Development Foundation. We're super proud to have each of you as a valuable part of the community and as a part of the Stellar Network. I would love if each of you could briefly introduce your companies for those of us who may not be familiar with them. Would you mind kicking us off?
Sure thing, Boris. Good to see you, and thank you again for having Flutterwave represented. My name is Flutterwave. We are a payment technology company focusing on the African continent. Essentially, what we're doing is building one platform to support all types of digital payments on the African continent. Today, digital payments are highly fragmented in Africa. We have over 40 currencies, we have over 50 countries, and we, on average, have about 3 to 4 different payment types that are not operable across the different countries. So it becomes very challenging to transact or even send remittances within the continent. What we're doing at Flutterwave is putting all of those payment types on one platform so that it can be easier for businesses and individuals alike to interact with each and every one of those payment types.
Thank you very much. Surin?
Hi Boris, hi everybody. I'm Surin and I represent Tempo. I'm managing partner of Tempo Money Transfer. So Tempo is a payment institution licensed in France, in European Union. We are providing money transfer services for individuals and B2B businesses. And we have covered more than 100 countries worldwide and sending money to all over the world and using different means of payments to be able to cover clients' needs.
Perfect, thank you very much. And last but not least, Ian.
Yeah, hi, good morning, Boris. Our company name is actually PetNet. Our retail name is Parahub. Para in English is money, so it's actually a money hub, right? And we've been in the remittance industry for about 20 years now, and a large part of that we were exclusive to Western Union. It's only this year that we became non-exclusive, and it's quite exciting for us to partner with Stellar and other remittance companies going forward, right? And apart from remittance, we also solicit loans. Well, PetNet is part of the Aboitiz group of companies and owned by Union Bank of the Philippines. So part of what we do also is we solicit loans for the bank And we also do corporate and retail foreign exchange.
Excellent. Thank you very much. Again, thank all three of you for joining us today. So I'd like to bring our attention to the topic that is still on everybody's minds, which of course is coronavirus. I'd love to understand how COVID has affected each of your businesses. Ian, you process remittances in the Philippines, which of course is a traditionally cash-heavy economy. Are you seeing this cash heaviness changing? Is cash still king in the Philippines, despite the prevailing headwinds in the market right now?
Well, I would have to say for now, yes, cash is still king. But I think not just in the Philippines, but in many other countries, digital adoption is significantly on the rise, as seen in a lot of banking apps here. Many of them have been waiving their charges for digital payments for bills. So technical adoption is definitely on the rise. Now for remittances, certainly the same is happening. We do have a mobile app, and especially in April and May, transactions have doubled, while majority of our transactions are still over the counter. We see digital transactions to be on the rise. It's a strategic initiative for us to grow this business and to support it and improve the experience and interface in our app.
Very interesting. Yeah, we've seen companies, of course, very interested in growing the digital rails, but we've also seen in certain circumstances and instances, governments and central banks making efforts to move people away from cash, whether temporarily or permanently, and towards digital for safety reasons during this time. Oh, do you have anything to add on this that you're seeing in the markets in which Flutterwave is active?
Yes, absolutely. So I mentioned earlier, our core market is in Africa, and we not only support remittances, we also support the acceptance of payments. So right around March, April, when a lot of economies or countries were beginning to issue stay-in-place orders, we also observed a lot of the regulators in the countries that we work with put in place, sometimes temporary, sometimes more permanent regulation in place to try to encourage the use of digital channels for transacting rather than cash. In Africa as well, cash is still king. I think we don't have exact numbers, but most definitely under 10% of all transactions on the continent are what have been migrated to digital platforms today. So it was really good to see the regulators step in and try to promote safety by implementing measures such as crashing or entirely removing transaction fees on digital transactions, just in an attempt to encourage the businesses and residents of their countries to focus more on digital transactions and build up the trend of digital transacting locally.
Very interesting. Thank you for that. Suren, I'd like to ask you, from where you sit in Paris, I'm sure the diaspora in the West has also been adversely affected, of course, by COVID. What are you seeing as the overall trends in remittances? Are people still able to have enough disposable income to send to their loved ones in the developing world?
Yeah, of course, it's but it's very good questions because actually, yeah, this COVID has a quite negative impact on the remittance business, especially and worldwide, but especially from countries which are supporting remittance, where from people send money. And yes, because we are working not only in France, but in the whole European Union. Yes, we saw that when it was lockdown in Europe, actually everything was stopped. Of course, we saw online business was growing, but anyway, it wasn't like appropriate growth. I mean, compare with what was negative impact, because everything was closed. People wasn't able to earn their money to send. Of course, yes, there was a negative impact, but when it was open again, before second lockdown, I will say we see that people still want to send money. Because as you know, Tempo use many channels to send money. Like it's online. There is also offline, like agent network, and we have our own stores. And in all those channels, we see that when it's lockdown let's stop, then people start to send money again, and it was growing. So I think that's, yeah, it was a negative impact, of course, but now it comes back.
I'm happy to hear that. And I have a question to all three of you. You know, we've seen many things shift during this time. Which of these changes do you think is temporary, and which do you think are here to stay?
I can go first, if I may. So I think regardless of COVID or not, there was a rise in switching from cash to digital. I think in some economies it was exacerbated by COVID, of course. I think that that's a trend that's likely to continue post-COVID, if there is such a thing as a post-COVID era. I think that digital it makes things not only safer for us in this COVID era that we're in, but traditionally it's also helped crash the cost of remittances. So if you think about remittances from a brick and mortar perspective, where you have to develop agent networks both on the receiving side, on the sending side, you have to maintain physical infrastructure, and all of the costs for maintaining the different aspects of the remittance business eventually have to be factored into the cost of the remittance itself. You'll see, so I think traditionally remittances have been estimated to cost about 10% of the value that you're actually trying to send. But when you compare that to digital channels, you see costs drop as low as $1 or under $1, regardless of the amount that you're trying to send, right? And that's because with digital channels, you can sort of eliminate some of the larger costs that are associated with traditional remittance businesses. And that's the space within which Flutterwave operates. We support remittance companies who are looking to pay out into Africa, be it into bank accounts or be it into mobile wallets. So I think we've been seeing over the last 3 years where we've been supporting remittance companies, Tempo being one of the companies that we've worked with. In the last 3 years where we've been supporting remittance companies, we've most definitely seen an increase in the volumes that our remittance partners are sending into Africa. And we most definitely anticipate that volume will continue to grow.
Very interesting. So it sounds like there are, in fact, some positive externalities as a result of this. Ian, I'm curious from your perspective in the Philippines, which of these changes that you're seeing do you expect to be temporary, and which do you expect to see for a long time to come?
Well, similar to what Paul mentioned, I think digital remittances will be on the rise, and I think how we're preparing for that is we're building a digital remittance platform, whereas before, traditionally, what we would do is we would look for physical networks, but with this remittance platform, and as I mentioned earlier, right, this year I think we partnered with close to 10 remittance companies already, and what we'd like to do, and we're offering that in our traditional physical counters. So what we would like to do next year is to put that all in the platform, in digital platforms, and part of the exciting thing is to look for these digital ecosystems where we can connect with these ecosystems through our platforms and give them access to all these remittance services. So for us, that's very exciting.
Yeah, hopefully the shift to digital will result in, be a silver lining at the end of the day, in that it may ultimately reduce the cost of transfers for many of the people that rely on remittances. for their day-to-day lives. I'd like to shift the focus now to the topic of interoperability in cross-border payments. Interoperability, of course, is something that we think a lot about here at the Stellar Development Foundation. But interestingly, interoperability can mean many different things to many different people, even within the cross-border payment space. So for example, interoperability can refer to mobile money interfacing with traditional banking systems. It can refer to the interface of crypto networks with traditional banking systems. It can even refer to interoperability between two different crypto networks, or not even talking about crypto networks. It can refer to interoperability between digital wallets, which is not in place today either. And so I'd love to hear from the three of you, what does interoperability mean for your companies? In what way is it important? How do you strive to foster interoperability? And I'd be interested to know if that was one of the primary reasons why you decided to leverage the Stellar network to help process the cross-border payments that you do. So, would you like to kick us off?
Yes, sure thing. So for me, interoperability means my client not having to be concerned with how they're sending funds or where they're sending funds, right? So today in Africa, I mentioned earlier, we have over 300 payment types across all the countries. So as a remittance company who is looking to send payments into Africa, you're often burdened with having to understand the dynamics of every country and having to, beyond that, understand how the different payment systems interact with each other in those countries if they interact with each other. So if there's a remittance company who's interested in sending payments into Tanzania, they have to reckon with sending payments into bank accounts across the country. They have to reckon with sending payments into mobile wallets into the country. Now, it sounds easy on the surface, but once you dig into the mobile wallet space, you'll find out they have 6 different operators in Tanzania that today aren't communicating with each other. So a traditional remittance company will potentially have to partner with each and every one of those 6 mobile wallet operators. That's time spent on partnership discussions. That's time spent on reviewing commercial structures, legal structures. That's time spent on technical integration with each and every one of these partners. That's time spent trying to understand how each of these domestic payment types work. Ultimately, for me, interoperability means taking that burden away from my client, the remittance company, such that they only have to be concerned with, I want to send money into Tanzania. This is the API that I use to send money into Tanzania, regardless of whether it's going to a bank account or whether it's going to wallet 1 or wallet 5, it really doesn't matter. So that's really what I'm focused on, particularly in my role of partnerships and expansion, making sure that Flutterwave can provide coverage for as many payment types across the countries where we have operations today, as well as making sure that we can continue to expand our payment type footprint to cover the other African countries where we don't currently have presence today.
Yeah, thank you. I think you bring up an interesting point, which may not be immediately obvious to the audience, which is that in order for a company to be able to service a large array of payment types, whether in collecting payments or paying them out, each of these integrations costs money, and ultimately this friction between the different networks means that the cost of integration is passed to the end consumer in many ways. So to the extent that we can work together to make systems more interoperable, I think the end consumer will benefit. Suren, I'm curious to hear in your role at Tempo, how do you think about interoperability in your business?
Well, actually, interoperability for us, it means the most important is clients. So it means what he needs. And because for any reason, the customer, our client, they need to send money smoothly, properly, and then to receive money as the way as it's convenient for them. So it means that taking it into acknowledge that sending money now, we are using a lot of payment means, yeah, and a lot of technology now we have, like especially we are talking about blockchain stellar technology. So it means that we should be able, so there is like two types. The first, we should provide our clients, let's say, common for them service, and this means that we should have interoperability in all type of technologies which we use. So they come to our office, they come to our website, they take our mobile wallet, they use our online website, so they send money, that's all, and then they receive money. And what happens between this is I would say, more professional stuff, which we have to be able to provide in a high, let's say, in a high quality way, you know, because the customer is, we don't need to, let's say, we can't put customer in the way when he thinks, guys, what happens? Why I just sent money, I can receive it, and how I can receive it, etc. So that's why for us using many type of technologies is this is a part of interoperability. You know, this is a like most important part now, especially now because this is a transition period for all of us. You know, because these traditional technologies, traditional payments, they start to pass through new technologies, and we face a lot of let's say things which we have to solve, including like regulation part, like some professional part, which is like making interact between different type of payment systems, payment technologies, and all of this we do just for one reason, that to allow our clients to receive money and send and receive money the way which is very common for them. So that's why we in Tempo we start to develop e-wallet. As you know, we use stellar technology very deep, and actually we decided to move forward. We decided to extend our license to be able to provide our clients a lot of payment means, a lot of services, to be able to give them, to attract them into our services, into our system. Because as you said, this COVID era, it shows that clients, the same like either clients or businesses, we have to be quite secure and be able to react on such type of cataclysm very fast and very quality. So that's why for us interoperability is like heart of our business for this moment. It's a strategical question. That's why we try to make it for different solutions: mobile money, traditional banking system, crypto network, traditional system, so digital wallet. So this is about what we are working in Tempo, and I believe that we will do it in a good way.
Yeah, that makes sense. You know, making the customer happy, of course, people think immediately of a smooth interface, a nice app, omni-channel. But a lot of the complexity and the real innovation happens under the hood, which is how do you connect to different payment networks in a cost-efficient way so that you can still offer the customer a cost-efficient payment. Ian, I'd love to hear a little from your perspective in terms of what interoperability means at Parahub.
Yeah, well, I think O and Suren captured quite a lot of it, right? And for us, I think what interoperability simply means convenience. Convenience for PetNet and Stellar to integrate, and for our customers, as O mentioned, right? Multi-wallet. We have our own wallet, but we're cognizant of the fact that our customers may have multiple wallets. So connecting to those wallets must be done as well, right? When we partnered with you guys, I think a large part of why we were able to connect quickly is that we were quite ready from previous engagements. So I think that is that became a factor for us to partner with you and other brands in the future as well. So integrating via APIs remains our focus, so that it becomes simpler and easier for everybody.
Excellent, excellent. Thank you. You know, we spoke at the outset of the panel about the market as it stands today with you know, the circumstances that we're all dealing with. I'd like to now, as our final topic, shift our focus to the future and discuss briefly, how do you see the remittance market evolving in, say, the next 5 years? And so I'd like to start with Suren. You know, you operate in the Eurozone, which is, of course, primarily a sending market for remittances. Do you think that if you look 5 years into the future, will sending agents continue to play a role, or are you gearing up for a world where that is no longer important?
Yeah, it's Boris, it's really very good question, because it's what we see and what happened in the market now, and based how technology develops. And I see that in nearest 5 years, we will see that role of agents will decrease for sure, especially in Europe, in Eurozone, because here we use, as you know, we use so-called mom and pop shops, which are not professional players. Of course, they are part of community, and a lot of people come from community and come to this shop, use their services, and at the same time they sell money transfers. But as we see that taking into account how technologies grows and what type of services money transfer players start to provide, especially I'm talking about outside like Tempo. So we see that I will say this way, we don't see big role of agents in the future. I will say even in Tempo, we make decision just to close, let's say, agent network, because there is no needs, you know, because we need to provide our clients high quality service because of this new technology, because there's a lot of questions and we have to keep our clients happy. So that's why. And also technology, you know, we use mobile wallets, we will launch mobile wallets and other solutions, other financial services, which wants, you know, more professional support, more professional service. So that's why I don't see that in the nearest 5 years in Europe, the role of agent will increase. It will decrease for sure.
Makes sense. And Ian, I'm curious, you know, given the innovation that we're seeing in the space right now, what is your prognosis for the cost of remittances overall as we move forward?
Well, if you look at the last 10 or even 15 years, right, for us, margins have steadily gotten thinner. And I think that's still going to continue, right? Like they say, sometimes it's a race to the bottom. So I think it's all about partnering with the right people so that we can get significant volume. And I'm very pleased. We are very pleased about this partnership we have with Stellar, because it allows us to explore direct relationships with other anchors that you have in other countries, which provides, I suppose, better margins going forward, right? So for us, that's really a great thing. For the customer, it will become more affordable. For us, it becomes improved margins, right? So while I see that margins will continue, or service fees will continue to decrease, partnerships like Stellar will make us continue to be relevant.
Excellent. Thank you very much. And as the final question that I have for you, O, before we switch to audience Q&A, is how do you see new entrants coming into the space? What do you think the competitive landscape will look like in remittances if you look out 5 or even 7, 10 years from now?
5, 10, 7 years from now, I think new entrants will focus more on digital channels, just because it's tough now for margins when you think about traditional remittances. And because digital has shown the capacity to crash the cost of remittances, I think a lot of players who enter the space will have to focus on digital if they want to remain in business and remain viable. That said, I think that they will need to explore some interesting business models, not just the fee-for-service model that we have in industry today that's quite prevalent. I know like a few companies have already started to pilot a zero transaction fee for remittances, and working on the back end with their partners to try to make up for revenues from a foreign exchange perspective. So I think we'll continue to see a lot of models like that, or even providing services that batch together the number of transactions as opposed to a per transaction fee. I think that's probably areas in which new remittance companies can look to enter the market. So mostly it's going to be like a business model innovation and less of a like a technology innovation, really, because the tech is in place in most places. It's just a matter of building a business model to support that technology and ensuring that the revenues or the income from said operations can continue to sustain any new entrants, especially because you have some pretty large incumbents from a traditional perspective and from a digital perspective.
Yeah, I think that makes perfect sense. I think the focus will indeed be on business model innovation.
Yeah. And final thought on that. So if you, at least in Africa, looking across a few governments who are, I think all governments recognize the importance of remittances to their countries, right? Like it's Africa being mostly a receiving region. Remittances contribute a whole deal to GDPs across countries. And a few governments have started to take note of that, and they're looking for ways to increase the amount of remittances that inflow into their country. So you have regulators stepping into place now and trying to work with the financial participants in their countries to guarantee zero cost remittances. So they're saying, go out there, find partners who can help us bring remittances into the country, offer them zero fees, so that they in turn can offer zero fees to their senders, and we can improve and increase the inflow of remittances. So there's a lot of opportunity in the next few years to continue to grow remittances across the board.
Super interesting. Off the top of your head, 5 years from now, or in 2025, what portion of remittances will be done over blockchain rails, percentage-wise?
Oh boy, I don't think I'm qualified to answer that question. I don't think I'm qualified to answer that question.
Nobody really knows, but what's your guess?
Of digital or of all remittances?
Let's say digital for now.
I think that we can probably look to about 40%. Going through blockchain rails as opposed to directly into a traditional payment type.
Ian and Suren, do you agree?
From my side, I will just add that the very important part of this is the regulation, because as a sending country, we see it in France, in European Union, it's very important when regulators and regulation in general, they will, let's say, they will accept finally blockchain, and if it happens, so then it means that it could be like 50% and more for sure.
Right. Ian, final thought?
Well, I suppose because it's on the rise, I would say maybe 20-30% in the next 5 years.
Got it. Okay. Well, that's definitely more than we see today. So let's all work together to bring the cost of remittances down for the end users. We're out of time. I'd like to thank you all very much for joining us today, and thank you for the audience as well.
Thank you very much.
Thanks for having us.
Thank you.
Well, I will extend an additional thank you to my colleague Boris, as well as Suren, O, and Ian. I love hearing about the various use cases the entrepreneurs on our network are implementing, and I'm very inspired by what these individuals are doing to truly reinvent remittances. Especially given the pandemic and effects of COVID-19, I think it's a critically important time for us to really be innovating in this space. As always, we would love to get your feedback on the session, which you can provide in the right-hand corner of your screen in that feedback bar. And coming up, we have a break right before our next session where we will be hearing from the incredible and inspiring executive chairman of Kiva, Julie Hanna. So go grab a coffee, tea, or whatever tickles your fancy, and meet me back here in just a minute for our next session. Thanks.
Stellar was created for currencies and payment. They understand exactly what market needs.
Parler Integrated Systems is a fintech company that uses blockchain technology to enable cross-border payments. Tempo is a Stellar anchor, and that means they issue a token that represents euro currency. Cowrie, we issue a token that represents the Nigerian currency. And in our partnership with Tempo, we transact over the Stellar network where we trade these tokens.
Transaction time, which means speed, it takes less than 10 seconds, and we increased our business 5 times during 1 year.
We've seen 5 times growth in daily payments over the last year. Today, we send 500,000 euro per week from Nigeria to Europe.
All right, it's quiz time. And if you've been listening throughout yesterday and today, this one should be pretty easy for you. The question is, what role do anchors play on the Stellar network? First 2 correct answers win prizes. I'll be back in just a minute with the answer. All right, and we're back. So first things first, I've got the answer to the quiz for you. So what do anchors do on the Stellar network? They provide on and off ramps for value transfer between Stellar and external networks. Anchors, which are typically regulated financial institutions, provide access to the Stellar network for people and businesses all over the world. They do this by enabling the withdrawal and deposit of value onto Stellar, an incredibly important function and adds incredible value to the Stellar network. Well, this next session is a can't miss one. It's all about how entrepreneurs can solve our real world challenges, something that President Sirleaf mentioned earlier this morning. In this session, we'll hear from an inspiring voice, entrepreneur and tech pioneer, Julie Hanna. She's devoted her career to finding solutions focused on social good and purpose-driven profit. With a vision rooted in her own experiences, you'll hear how she has built tech to democratize systems. So enjoy this fireside chat with Julie Hanna, which will be moderated by Salim Ismail, who's the founder of Open Expo and Exo Networks. Thank you.
Folks, welcome to the Stellar Development Foundation, and thank you for this Meridian conference. I'm Salim Ismail. I'm here with Julie Hanna, and we're going to talk about her work in entrepreneurship and the future. Just for background, I was the head of innovation at Yahoo, running Brickhouse, their incubator. I helped build out Singularity University as the founding CEO, and then wrote a book called Exponential Organizations. I'm a huge passionate fan of crypto and specifically the development network and the work that you're doing at Stellar, which is stellar. So a wonderful name there. Julie, welcome. You're the executive chair at Kiva. You're the general venture partner at Obvious Ventures, and also you're a senior advisor to Google X. Give us a little bit about your background, especially your early years, to give context. And then I want to ask you a few questions.
Hi, Salim. It's great to be with you. Yeah, by way of background, I'm a technologist and an entrepreneur. I've been a part of a founding team or sole founder and CEO of 5 companies in the B2B and B2B space. Venture-backed companies, 2 have gone on to IPO and 2 were acquired. And I've parlayed that experience as an entrepreneur to continue to help drive innovations at a mass global scale. The thing that the red thread that's run through all of my work really has to do with, I came of age during the nascent days of network computing, and the thing that hit me kind of very strikingly was that the simple fact that people could connect person to person or peer to peer, that was revelatory. And I saw how that created an opportunity to refactor systems of hierarchy and put power into the hands of the many rather than the few. And with the internet, that was kind of taken to an exponential level. And so I came to believe that technology had the potential to be the most democratizing force in the history of humankind if we aim it toward that end. Its capacity to level the playing field on a mass global scale is unprecedented. And I cared about that because of my life journey. And so it's hard to talk about my work without also talking about my personal history. My journey brought me to the front lines of the tech revolution on the kind of the near eve of the internet. But my journey began on the front lines of war. And the dreams that were born out of my heritage as a Coptic Egyptian, as a survivor and refugee of war, as an American immigrant, they really were about creating a world that understands that while talent and dreams are universal, opportunity isn't. A world that understands that a cornerstone of justice and a pillar of dignity is fair access. I saw how my life changed, my early beginnings of not having access, and how that shaped my family's identity and our sense of possibility. And then I also saw how my life changed when I got unfair access in Silicon Valley. I was the same person, but the world treated me very differently based on the access that I got. And so to me, the access that we get is I think is defining on every level. And so that's my kind of definition of justice. I came to Silicon Valley 25 years ago with those dreams and a computer science degree. And I did believe that technology could enable that kind of fair access. I thought it could put a little bit of power into the hands of people who didn't have it, people like my family. And that was a future that I wanted to help create. And I began building products and companies that democratize access to information, to communication, and with Kiva, fair access to capital. And seeing how those products reached hundreds of millions of people globally, it's deepened my conviction that tech is a potent democratizing force, and that if we can unlock fair access to the advantages of technology and business for the many, not just the few, that we can uplift all of humanity.
And I think that's what gets a lot of people excited about cryptocurrencies and networks like Stellar as well. Talk a little bit about the work that you do at Kiva, because most of the audience probably understands Google Apps pretty well, but fewer people understand Kiva, and I think it's worth delving into for a few minutes the power of and what you've accomplished at Kiva, which is unbelievable.
Yeah, for those who aren't familiar with Kiva, Kiva invented the crowdfunding model 15 years ago. And our mission was to connect people through lending to reach small and micro business entrepreneurs who are underserved, most of who live in kind of the riskiest parts of the world. And that simple idea of crowdsourcing small amounts of money to reach entrepreneurs around the world has not only given way to kind of a burgeoning crowdfunding industry made up of thousands of companies, but in the case of Kiva, in that time, we have facilitated billions of dollars of crowdsourced loans that have reached millions of entrepreneurs. And this money flows, the loans and the repayments, across 190 countries. As we got to mass scale, what we found was, regardless of circumstance, when we were funding small and micro entrepreneurs, the repayment rate was very consistently 96 to 98%. And we had the big data to show that the world's unbanked and underbanked, the 3+ billion people, are actually very creditworthy. And when we saw that we were in a unique position to demonstrate that to the world, and actually we had institutional capital coming to us saying, well, you're crowdsourcing this money, you know how to reach people on the ground reliably, we've got large amounts of capital we want to put to work. And so we now have, in addition to the crowdfunding marketplace, we have Kiva Capital, which is essentially asset management to drive large amounts of institutional money into the hands of entrepreneurs on the ground. The last thing I'll talk about, which I think is the most relevant here, is we realized when we looked at how we were reaching people that essentially there were two things that stood in the way of billions of people being unbanked. And we looked and said there's 2 to 3 billion people unbanked, more underbanked, and yet there's trillions of dollars of idle capital sitting in bank vaults. When you look at it through the lens of technology, you say, hey, that's a distribution problem. And technology is very good at solving distribution problems. So when we looked at that and said, what would unlock this capital? We realized there were 3 things. One, verifiable identity. A bank had to be able to perform a KYC check. Second, credit history. And third, an aggregate view of the demand so that banks could move large amounts of capital. And we realized we were in a unique position because we'd been amassing identity and credit history information for a decade and a half for millions of people. And that if we could take that and put it on the blockchain and make that information secure, immutable, and visible, that would start to unlock the flow of capital. And not only would we begin to bring those in the informal economy into the formal economy, but we could actually unlock a massive green field market that's highly profitable. I would argue it's the world's largest market failure. The fact that we have nearly half of the world's population that are unbanked, and many of whom who don't have verifiable identities. So that's Kiva Protocol. We began to test that thesis by partnering with, initially with the president of Sierra Leone to roll out a nationwide platform, blockchain platform, to give people verifiable identity, get them banked. And in under a year, we managed to deploy this network in Sierra Leone. And at the launch of this last year, Nancy, an Ebola survivor, and a teacher who had been rejected by banks 6 times in attempting to open a bank account, walked on stage with President Bio, put her finger in to apply for a bank account, and within minutes had opened her first account. And now every Sierra Leonean, which is a big deal because Sierra Leone has 80% unbanked, all 5 million Sierra Leoneans now have access to verifiable identity in a way that's far more advanced than really any other part of the world. So that's a little bit about where we're at with Kiva Protocol. And the last thing I'll say about it is, because of the reach of technology and the potential of blockchain, we believe that we can create a financially inclusive world for all, for the many, not the few, and that we can do that in our lifetime. And that's become kind of our expanded mission.
In terms of the purpose that drives you, you're also very passionate about people building purpose-driven organizations.
Mm-hmm.
And talk about the purpose-driven profit aspect, because I've heard you talk about that in the past.
Yeah.
And by the way, President Obama named you a presidential ambassador for global entrepreneurship. And so this is a global effort that you're trying to do and roll out these things all over the world. And financial services only really works when it's global in nature. So there's a powerful connector there as well.
Yeah, it's, you know, there's some themes. I mean, I think because of my journey, when I ended up in Silicon Valley looking at, I was starting these companies and creating massive advantage for the region, for the Bay Area. And I kind of looked at it and I said, I can keep doing that over and over again, but there's an asymmetry in knowledge and information around the model of entrepreneurship that Silicon Valley practices that's given us massive advantage in the region. How could I work to democratize access to that, to basically enable that kind of advantage to other parts of the country, other parts of the world? And I began traveling and essentially looking at how to export the Silicon Valley model of entrepreneurship. And that kind of converged in an interesting way with the work with Kiva, which is very much about global entrepreneurship. And around that time, and a number of years later, President Obama created this role out of his insight that the way that we celebrate and support entrepreneurship in the US may actually be our greatest export. And that if we could export this to other parts of the world, especially places where you have high youth unemployment, no jobs to go to, you could get to a place of economic stability. You could sort of feed that, and you can't have country stability without economic stability. So it became almost sort of a proactive path to peace and stabilization, and the role that entrepreneurship could play there. So that was the work with President Obama. I think the other insight that I had was that we tended to build technology and products for people in our world, in our own backyard, and then we would sort of scale it to the globe. But I began thinking about, well, again, you have asymmetry of access to these technology innovations. What if we took technology innovations that were being pioneered here and took them to the places where they were least likely to flow, places like Senegal and Sierra Leone? And I began looking at ways of doing that in places where that was happening to see how to accelerate that. And what I would say is that the advantages of technology and business are so profound that if we can essentially expand the access to those things, then you get this natural uplift because you start to create the same ecosystems of success that we take for granted here, the kind of the invisible scaffolding that upholds our lives. You start to kind of build that in other parts of the world. So I've been very passionate about that because I do believe that talent is universal. And we need, if you think about what the entrepreneurial instinct is, to me, what it means to be entrepreneurially minded, it's about this relentless pursuit of a better way, like wanting to create a future that you want to live in. Well, the more diverse voices and dreams we have at the table that are creating the future they want to live in, the more we get a future that represents all of us. And I think so that's become really essential to our future. When you look at, you know, the fact that the number of us creating the future tended to sort of have a more homogeneous profiles, had meant that we have not created a technology future that represents us all. And now we've got a more awareness and consciousness about this, and we're starting to kind of move to diversify and address it. And I think this is a profoundly important inflection point for innovation.
On the ground in Sierra Leone, when you're implementing this new protocol and this, what are the biggest resistances you're seeing, or the issues? Is it once the president or prime minister is okay, does it go pretty quickly, or do you get a backlash from the legacy institutions in that country?
You know, one of the great ironies, you know, I think the our cardinal rules in tech is you go bottom up, grassroots, and you disrupt the institutions kind of that way. And certainly Kiva's crowdfunding marketplace is about that. It's, I sometimes say, call it the world's bank as opposed to the World Bank, which is top down. We're the world's bank, you know, a bank that's for and by the people, that's, you know, democratizing access to capital in a radically decentralized and crucially equitable way. And it's connected capital. So the counterintuitive wisdom here with working with Sierra Leone was that actually by partnering with the president, who had kind of a very progressive agenda for the country, we were able to get all of the banks and the financial institutions in the country to sort of orchestrate working with us at the same time. He turned to the central bank, to the other banks, and said, you know, we partner with Kiva. So this was an unusual case where it actually became an accelerator to doing a nationwide implementation and deployment. So, you know, we're in the process of partnering with other heads of state in other countries. And I think we're going to find out how much of that is a repeatable pattern, how much, you know, a top-down approach in terms of go-to-market is an accelerator versus some of the complexities that you might expect to arise.
And are you optimistic about being able to take the Kiva protocol into multiple other countries very quickly?
Yeah, absolutely. Because, you know, it begins with, right now, there's a growing awareness about the importance of identity. And so you have a number of countries that are looking at this. And especially if you look at, again, you know, I think about this a lot because of my heritage as a refugee, but you look at the number of displaced people we have in the world today, it's exceeded what we had in World War II. I think we're at 60 million. I think we've entered an era of permanent displacement when you look at the effects of, you know, climate change, countries being destabilized. And so the ability to walk across a national border and with your finger be able to prove you are who you are becomes actually quite crucial. And so because of that, what we've seen is there's definitely global interest. And I spoke at, I addressed the UN General Assembly last year. It's the first time that the UN General Assembly had invited non-heads of state to address the assembly. And I spoke about the work with Kiva Protocol, and the response was quite overwhelming from countries all over the world.
So, you know, this goes straight to the you know, one of the commentaries, we've researched climate change quite a bit, and it's very likely that summer temperatures could hit 63 degrees Celsius in the Middle East, making the entire region unlivable. So forget the 2-3 million Syrian refugees, we could have tens of millions of refugees just from that before you even get to the Bangladesh and some of the other areas. How do you think about the impact of climate change around all of this? And specifically with, I'll also ask you to talk about the impact that you see with women-driven organizations, because that's a key part also. So let's start with climate change. How do you feel about that? And how do you think about applying this to, and using this as a mechanism to have an impact on climate change? Because I've heard you talk about that.
Yeah, it's one of the, I'd say, unexpected and probably most profoundly happy surprises that we discovered with Kiva. And again, this is, I think it speaks to the power of fair access, because if you think about what Kiva has enabled, you talked about mistrust in institutions. I'd say that Kiva is the largest human experiment in the dimension of trust. So you think about what is it that is driving people to lend to strangers, and why do they repay it? And so when you think about that and the equity of it, what's interesting is, you know, in Silicon Valley, we talk about how women entrepreneurs, female, are way underfunded, like, you know, shockingly so. And then you look at crowdfunding and crowd lending with Kiva, over 80% of our entrepreneurs are female or women. And they repay their loans. Not only do they repay their loans at a higher rate, but they reinvest 90% of their income in their families and in their communities. And so what you see is that these loans not only improve their lives, but improves their families' lives, their communities' lives, and ultimately plant the seeds that can change the fate of a village or a region. And so one of I mentioned this profoundly happy surprise. What we see is the first thing that women do when they get economic empowerment is they educate their daughters, they have fewer children, and empowerment of women and girls has been identified in the book Drawdown by Paul Hawkins as the #1 way to reverse climate change.
Yeah.
And for the simple reason, for those simple reasons that I mentioned. And so it's estimated that by 2050, that could actually result in a reduction of the world's population by 1 billion and over 119 gigatons of greenhouse gas emissions. So
Wow.
when you think about that, one of the interesting, I think, macro observations, we tend to think about social justice, poverty alleviation, empowerment in isolated ways. You look at the SDGs, and when we look at the number of SDGs that Kiva kind of moves the needle on, it's stunning, and including climate change. The harmony that essentially what is good for people is also good for the planet is something we've kind of almost compartmentalized in our minds. I mean, I would say that if you look at bringing the advantages of technology and business and fair access to capital to all of humanity, which is overwhelmingly women that don't have access, and you bring humanity to the way that we do business, this has not only a profound impact in unlocking human potential, addressing social justice, but can move the needle on climate change. So that's how I think about it.
So this is fascinating because we can essentially take the financial inclusion model, show a direct line from the impact of that to the health of women, educated young girls, and how they operate, and a direct line to an impact on climate change, which is incredibly powerful and now becomes kind of mandatory, right? And for folks in the Stellar Network, obviously financial inclusion is absolutely core to the mission. And so this lines up incredibly well with that. Let's drill in just on one thing. I know this statistic about women, right? Mohammed Yunus also found the same thing out. If you lend to the women, they pay it back. Why?
Because it's what women do with the capital. So they are using it to educate their daughters. They're using it for health. They use it to fund businesses so they can support their families. And something about, and they are also the connective tissue of the community.
Yes,
so
very true.
They are very focused inward on the community, on the family. And so the loans are, no one takes a loan and then is done. It's like, kind of like, you know, even those of us who are banked, you know, it's rare that a human being takes one loan. So the loan becomes this enablement to qualify for larger loans at better interest rates. And there's a motivation there to repay the loan. A lot of times they borrow together as a group so that if someone has, you know, a struggle with their crop and can't repay the loan, they cover. And so there's this group accountability. There's very much this kind of community aspect to it. And that tends to be the way that women naturally think, because they are this connective tissue of not only the family, but of the community.
One of the commentaries we make is that, you know, we use a set of very male archetypes to run the world today. Judeo-Christian religions, military-industrial complexes, the corporation, very hierarchical top-down command and control structures. And that's great when you have scarcity. When you meet abundance, the male archetype relates to abundance and as power and tries to hoard it, like Middle East oil or Wall Street money, and women tend to share it around. And that's the relationship to power and resources. And therefore, if you can educate and make the women sustainable, then everybody benefits very powerfully. So let's touch on an area that I know you're really passionate about. If networks like Stellar and the work that you're doing at Kiva actually result in financial inclusion, right? What does that do for humanity? Where do we end up, and what does that look like as a progression? We've seen that what happens on the capital side, as you've described it, we have an impact on climate change, et cetera. But what does that look like for everyday people if we have financial inclusion around the world?
Yeah, thank you for asking this. I mean, I've drawn great inspiration from Stellar as an organization, not only because of the technology innovation, but because of the intention behind it. and that kind of very sincere commitment to use the technology innovation and a frame of abundance to really kind of have a scale reach around that. And this is, I think, one of the more, I would say, enlightened ways to think about that. And I appreciate the way you frame the question, is that this isn't about those of us who are fortunate helping those of us who are less than fortunate over there. This is about a recognition that we are living in a globally interconnected digital village, and that what was only possible locally is now global, and what's global feels local. If you look at a picture of the internet, it's a reminder that we're all nodes on this organism. Yeah. Where and the butterfly effect is happening every day. One small action in one part of the world becomes has a world sweeping effect around the world. And so when you really internalize the notion of that kind of interconnectedness, you realize that every action that we make affects everyone. And so when we do something that benefits another, we are actually benefiting ourselves as well. And that's the real insight here. I mean, I'll just share some statistics. You look at women's hands do 66% of the work. They grow 50% of our food, but earn 10% of the income and own 1% of the world's land. So what would a world look like where there was more equity there and there was more equity in other parts of the world? The first thing that comes to mind is not only is that addressing a mass social justice issue, the kind of human potential that's unlocked when you bring billions of people online and you give them the kind of access that we take for granted. I mean, I think that this is, you talk about exponential organizations, the exponentiality of that, when you unlock that in billions of people, I think we haven't begun to see what human beings are capable of. And that to me is what I find so deeply inspiring about Stellar's commitment and the possibilities of what can happen when we democratize access.
And obviously, if you lift people off the bottom couple of layers of Maslow's hierarchy via financial inclusion and the work that you're doing and networks like Stellar are doing, then people can self-actualize and kind of really play full out. And now you have inclusion at every level, and you've empowered everybody in the world, which is incredibly inspiring.
Well, you said something when we were preparing for this that I think really captures it so beautifully is, we talk about bootstrapping startups a lot. And you said, like, what does this look like if people are getting this kind of access? And I was like, oh, humanity bootstraps itself out of scarcity into abundance. And that really captures it for me, because there's the objective definition of abundance, which is, do I have enough money? Do I have a place to live? Do I have enough food? But we also have a poverty of mind that we are wrestling with regardless of our circumstances, and moving from that scarcity mindset to an abundance mindset, I think is part of our journey, regardless of where we sit on the socioeconomic scale.
Very, very profound. And now if we can just apply that to the US, where my understanding is 40% of the population can't put $400 together in an emergency.
Yes.
We just need to bring it back. I'm super fascinated by the idea that we'll take some of these new technologies and build these networks in the developing world and then bring them back into our world at some point. So
can I say something about
sure,
that?
Go for it.
Yeah, this is actually a very important insight. Well, for one, we land in the US as well as, all over the world. And I think one of the things that people forget about the US, although we've had a nice kind of consciousness raising moment around COVID with this, is that it's estimated over 40 million Americans are unbanked.
Yeah.
Far more underbanked. You mentioned the statistics about not being able to handle unexpected expense. I think that's closer to 60% of Americans. And then you have, and then you've got kind of the number of people that are barely hanging on, who aren't even included in those numbers. So that need is very much in our own backyard.
And it's
the idea, yeah.
Good.
Well, the idea of taking technology and going to overlooked or underserved markets and then going global scale with them. I mean, this is how every technology disruption has occurred. If you think about it, is the best way, the playbook, the innovator's dilemma is you go to an underserved, overlooked market, and then you build out your solution there, and then you kind of go mainstream from there. So I think that's also the potential that I see with the work that we're doing with Kiva, and why anybody who's doing something in blockchain or crypto, if you find an overlooked, underserved market, that tends to be a great place to drive an innovation.
On that note, let's wrap it up. Julie, Hannah, thank you for the comments and the incredibly inspiring work that you do. Thank you to the Stellar Development Foundation, and it's been great to be with you at the Meridian conference. We'll sign off and back to the conference. Thanks very much.
Thank you, Salim.
All right, well, that was an incredible discussion and really an incredible honor to have Julie sharing her story with us at Meridian. I'm inspired by her drive to show that talent is everywhere, and it's really access and opportunity that makes the difference. I'm certainly feeling inspired, and I would love to hear how you're feeling. So please share your thoughts in that feedback bar on the top right-hand corner of your screen. We've got a break coming up, and then we'll get back to our next session, which is Life as an Anchor. We've been talking about anchors a lot during this conference, so it's time to really dig into the deep end and hear about their business and their story on Stellar. Stay tuned, we'll be right after this break.
I'm Alec. I'm a software engineer on the Nebula team, and I've been working at SDF for about 4 months. What I enjoy about SDF is we have people all over the globe, but we really are working as one team to solve one complex problem related to payments. One project in particular I'm excited about is the growth of our new dollar savings app, Vibrant. I think it can help a lot of people in countries where their inflation has grown to such extreme levels. Over the next year, I'm excited to see how the SDF network grows as we get more anchors, companies, people to join our network, and it grows in usage. Thank you.
All right, and we're back, and it's time to get into the nitty-gritty of how we bridge the world's financial systems with Stellar. Anchors, of course, are a critical piece in achieving this goal. So let's get into the details of what an anchor is, what they do, and the business opportunities that surround them. In this session, we'll hear from leaders from Bitbond, N-Tokens, and Cowrie Systems. Boris Reznikov is back to moderate this session. Boris, the floor, or shall I say the table, is yours.
All right, thank you very much, Lisa, and thank you, panelists, for joining us, and thank you for everyone at home who's listening. Anchors are a critical part of the Stellar ecosystem. We've talked about them a lot over the course of the conference. For anyone who is not familiar, just a quick reminder, anchors are the fiat on and off ramps that connect the Stellar network to global financial systems, and ultimately are the companies that make Stellar useful and accessible to millions of people around the world. And with that, I'm thrilled to be joined today by our three esteemed panelists. We have Tomas Tejeda, co-founder and CEO of N-Tokens. We have Jarek Nowotka, CTO of Bitbond. And we have Ladi Okrodudu, COO and co-founder of Cowrie Systems. And I'd love it if the three of you could please introduce your company briefly so that everybody knows what you are focused on, starting with Tomas, please.
Thank you, Boris. It's great to be here. I was last year in Go and SDF. It was great, and it's a pleasure to be here. Really an honor. Well, N-Tokens, as you know, we are looking forward to take more access to Brazilian markets and the general public elsewhere. We are doing that by B2B growing, meaning the idea is that we want to provide access to platforms that they can grow more volume and they can grow business within Brazil. The business we're looking for and working directly to build are remittance, cross-border payments, which will work with Satoshi Pay if inclusive. Remittance, we work with Tempo and at Stellar, of course. We do all tokenization business development, and that's important to build with D-Stock, for instance. And importantly, reach Brazilian fintechs. Brazilian fintechs, they are going through a process of open bank and a growing market for more digital services. And we believe that they can lever a lot from the technology of Stellar.
Excellent. We're thrilled to have you. Thank you very much, Tomas. Jarek, would you like to introduce Bitbond and the work you're doing?
Hi. Yes, sure. Thanks. Thanks for having us. So Bitbond started as a lending marketplace, and then, like 2 years ago, we've been extremely lucky because we got like the first formal approval for issuing STO on a German market, like fully regulated STO, and we did it. It was based on Stellar, and essentially. People started asking us, people and companies, like how did we manage to do that? So we decided to switch our business model. Instead of lending, we focused on tokenization services and essentially turning this one-off STO that we did for ourselves and seizing this opportunity to allow others to do the same. And we've been thinking, like, what kind of clients we should be working with, and we always wanted to make an impact, and we've been thinking that one of the particular segment of clients that were asking for tokenization services and was always interested in this were established financial institutions, particularly banks. that been experimenting with blockchains for quite a long time, but didn't have like much practical use cases. And what we brought to the table was a practical pipeline for securities tokenization. So since 2 years now, we are working with banks and building tokenization pipelines for them.
Excellent. Thank you very much. Ladi.
Hi, Boris. Thank you very much for having me. And hello to everybody. So yeah, we at Kawi, we are focused on cross-border B2B payments to and from the African continent, as well as within the African continent. This has been like a passion for us, and it's something we've been trying to solve for quite some time, a number of years. And luckily, a couple of years ago, we came across the Stellar network and found that this was the ideal platform for us to build our services. And that's where we are right now.
Excellent. Well, we're thrilled to have all three of you personally and all three of your companies as Stellar anchors as part of the community. I'm also thrilled to have such geographic representation here on this panel today, with ranging from N tokens in Brazil to Kawi systems in Nigeria and Bitbond out of Germany. So we have quite a bit of representation there. I'd like to take a deep dive in this session, exploring what it's like to run a Stellar Anchor service from the insider's perspective. And I'd like to start by focusing on the business side of the equation, because ultimately that's typically what is the driving factor in making these decisions in the first place. And so perhaps we can start by exploring, what is the particular business opportunity that you're addressing, and even more specifically, what is the business opportunity that drove you to become a Stellar Anchor in the first place? Jarek, would you like to kick it off?
Hey, thanks. Sure. So just to clarify, like our position in the whole scheme of things, we are providing technology. So Bitbond is pretty much supporting our clients in becoming anchors themselves. And since we have quite vast knowledge, this is what I like to think, in blockchain and how the technology can be leveraged, we as well provide substantial consulting knowledge how things can be implemented. So when we've been discussing first projects with one of the banks that we are working with, they primarily, and this is like what every bank starts, like the first project that every bank starts thinking about, it's pretty much key management and custody solutions. And it makes perfect sense because this is like the foundation that allows you to provide further services on top of for your own clients. And the second sort of piece that we are providing, and that comes naturally after setting up a custody, it's asset issuance. So for our clients, which are like serving corporate clients, this is a typical process that they are doing for many years now, but it's still paper-based. So essentially, digitalization of this process has tremendous impact on the performance of the whole issuance process. And obviously, these instruments that are being tokenized, these are like corporate bonds. Usually the face value is denominated in euro. So the next piece of the puzzle is stablecoin, like to go fully digital without essentially replacing the whole cycle. So what happens with these three elements, custody, asset issuance, and stablecoin, is that a client can come open an account in a bank, can issue an asset, and can receive payments and process the bond as well, like paying out coupon payments or dividends if these are like dividend paying assets through the stablecoin. So like fully digital process. So from a business perspective, I guess the main driving principle here is that essentially this is the future. And right now, when we have just starting to actually get experience in how these things actually work, and from a user perspective, you can already see that there's no coming back. And like the benefits of going full end-to-end digital, like with digital tokens and crypto in general, definitely are going to transform how the finance is done. And so obviously banks facing this choice either stay, because their like main value is the distribution, right? That they have all the clients that are keeping money in banks. This is essentially what their capital is. So once these digital offerings will start to roll out, and then the question is who will jump on the ship and serve their customers with new user experiences and more streamlined processes, and who will lag behind. So I think like from business side, this is really, I don't want to say no-brainer, but essentially this is just a technological wave, and yeah.
Well, we also see this technological wave, and we're glad that you're helping your banking clients surf the wave, so to speak. It's also interesting to hear from you that it seems like your clients are using stablecoins and using the Stellar network not only for payment purposes, for example, but also to serve use cases that are more related to institutional asset issuance as well, and that it's a fairly versatile product offering that you're able to develop on their behalf. So thank you very much, Jarek. That's super interesting. Ladi, I would love to hear it from your perspective. What is the specific business case that you're addressing at Cowry, and how are you using Cowry as a Stellar anchor to help address it?
Okay, thank you very much, Bruce. So we have a major challenge here in Nigeria and the wider Africa as a whole, which is there's a very limited supply of Forex, and there's also limited access to global financial instruments. And for a country like Nigeria that does a lot of major importing, this means basically most of the transactions are done on a cash payment basis. And because of the limited supply of Forex in the country, it's actually a challenge paying for goods and services internationally. Getting access to those to Forex in this country can be expensive, it can be slow. We saw this as an opportunity to offer a service where trying to make these payments is relatively painless. You don't have to search for Forex all over the place. And basically, we're using the Stellar network and our ability to on-ramp and off-ramp Naira onto the network to be able to partner with other anchors in other regions, Europe, for instance, where you can make payments for goods and services, basically. So we found it's a challenge that's if we can solve, we can prove to solve, will prove to be very successful business-wise. As in, there's a lot of demand for this service right now in Nigeria, especially with most of our Forex is gotten from oil. I think about 80% of our foreign earnings is from oil. And with the oil price and the post-COVID world that we're in right now, there is a demand for Forex outside of the government circles. And we are providing that over using the Stellar network and partnering with various anchors in various regions, basically.
Got it. Very interesting.
Yeah.
So it sounds like you are leveraging the Stellar network as a portal to facilitate payments both into and out of Nigeria, encompassing not only B2B, but also likely P2P payments as well.
Yes, yes, exactly, correct.
Great. Tomas, would love to hear from you in terms of what N-Tokens, what particular business case N-Tokens is addressing, and what led you to become an anchor on the Stellar network.
Well, the particular business case, and it's a bit of no-brainer as Bitbond does see, is friction. It's very hard to move money, especially cross-border. It's hard, it's expensive, it's slow, it's complicated. So there's unmet demand for digital services in payments in Brazil. And in order to do that, in some cases, it's more like in case of remittance, maybe it's the spread or just the cost of it. But in some cases, as an exporter for small exporters, it's simply impossible to do. And there's people that would be willing to export more, and they do not reach the market. We also have a big number of unbanked people in Brazil, with a gig economy in Brazil, which is very big and very relevant in terms of economic size and number of people involved. And they're simply not able to have a bank account or to be able to receive payment for their work. And in that term is very no-brainer. There's people willing to do business and there's no wait for them to do business. So if we provide means that it happens, in some case, we have to provide more efficient, as in remittance. But in other cases, it's simply providing the means for people to do business. Then there will be business where there are not. So we believe that whenever you make it possible for economic agents to start a new business, new relations, and make profit, it's a good business. Not exactly the same way you collect in different scenarios, but the business case, that's it. It's to remove friction from the market, and let it grow.
Yeah, that's very much aligned with the ethos of the Stellar network in general, which is to remove the friction that's inherent in cross-border payments. So we're happy that you're working on that with us. I'd like to focus for a second on business models behind being a Stellar anchor. Jarek, well, let me back up for a second. If you rewind a year ago, one of the main components of the business models behind stablecoin issuance was, of course, to earn interest on the monetary base. You fast forward to today, interest rates have crashed around the world to deal with the pandemic and the economic circumstances that it's created. Jarek, Bitbond works with banks in the Eurozone, in Germany in particular, where, of course, you're in a negative interest rate environment. How have you found that to impact the business case behind some of these stablecoin issuances and being an anchor in general?
Yeah, thanks for asking this question. So it's kind of interesting to see because you can see what happens, for example, with other stable coins that are issued on Ethereum. And most of them, like at least these are that are popular, are tied pegs to USD, and obviously the yield on DeFi protocols it's quite substantial. So it's easy, at least with if you accept USD exposure, to earn interest using crypto native protocols. And of course, for Euro, it's not the case because there is no equivalent in terms of a stable coin that could support this kind of use cases. So what we are hoping to see actually is how converting Euro to digital asset before CBDCs happen, can actually impact these all hungry investors for yield, like looking for yields. If euro-based stablecoin can actually make an impact and start to be visible on decentralized protocols. So obviously we are like reaching a bit away from sterile use cases, but what we hope as well is there are already some applications that integrate with Stellar quite well, like decentralized exchanges, and obviously Euro stablecoin present on an exchange can be a part of this yield earning product.
Makes sense. So it sounds like you're looking for other venues to generate yield on this asset. Great. And I'd like to turn to both Ladi and Tomas and ask you how you've thought about the business model that you employ in your anchor service. Are you monetizing primarily on deposit withdrawal fees? Are you monetizing primarily on the spread in the Forex conversion? Or are you using a different type of business model to support this business? Ladi?
Thank you. For us, we are monetizing on the spread. Deposits and withdrawal fees are pretty negligible. So we just try and monetize on the spread, about 1%, nothing too crazy. But we believe that the volume will make it profitable at the end of the day. Got it.
So you want to make the barriers to entry as low as possible for users,
yeah,
and monetize on larger volume.
Sure. Yeah, exactly.
Tomas, would you agree, or do you see it differently?
No, I agree that in the business that Kari does, I think it's a great model to be able to be more fair. You take a spread, it's more transparent. In our case, we're not dealing directly with retail, so we are not putting spread, and also we are not working with, let's say, remittance with withdrawal fees. What they do is that we see, depending on each business and each platform that we partner with, how we add value, and we try to share this value so that it is transparent to the customer how much they are paying for the service it is being provided. And we don't add a cost for the customer that it doesn't see. So for us, it's more like, okay, are we reducing the spread in the remittance-based business? Okay, how much are we reducing the spread because it's more efficient? Okay, how can we share this spread that's this benefit for the client? Or in other cases, are we facilitating a business that are not there to begin with for a platform that is offering a service for a gig economy or for exporting? If you're offering a service that is not there and someone is charging for the service, we can obviously talk about commission sharing and something like that. But definitely, we're not having as a primary source of business revenue the interest rates on deposits. Maybe it's not feasible because of the current rates of interest rates around the world.
Mm-hmm. Yeah, we work with many different anchors around the world, and it's fascinating to us to see the different types of business models that are employed to serve the various use cases that the anchors address. Now that we've spoken a little bit about the business opportunities that you're addressing and what types of business models you're utilizing to make it a viable business, I'd like to spend some time focusing on a few specific areas that are part and parcel of running an anchor service. So, of course, there's the technical piece. How do you integrate onto the Stellar network? How do you integrate with the bank partner on the other end? How do you manage compliance? How do you manage shifting regulatory headwinds and tailwinds? How do you manage banking partners? And last but not least, how do you manage customer service as you start to ramp up your customer base. All of these things are extremely important and very different. And I'm interested to hear from the three of you which of these, or maybe another aspect that I haven't mentioned, has posed the greatest challenge? Which of these has been the most difficult for you to manage? Jarek, do you have thoughts on that?
Yeah, cool. Thanks for asking. I'm laughing because I just want to tell you an anecdote. So when we started approaching integration with a bank, anonymous bank, we've been faced with a challenge. Okay, so user is sending a euro transfer, like a SEPA transfer, and we need to get a simple notification, that the transfer has happened, and in response issue stablecoin digital assets. So simple use case, in the age of APIs, like if you have Stripe or other services, it's super straightforward to process payments. However, no, not so much with SEPA. And the first solution was proposed solution was to set up a physical Windows machine sitting in, not even in a data center because it wasn't compliant, somewhere where we would remotely FTP to this machine and download a file of transactions like once a day or something like that, and then reconcile which transactions are new, which are old, and then try to guess basically which transfers has happened and which didn't. So fortunately, we streamlined the whole technical integration quite significantly. So this is, at least from our experience, when we are working with institutions that are really like, they've been forging compliance policies for years. And right now with new technology, most of these compliance requirements are pretty much obsolete. There's really a lot of work in changing like the way of thinking about compliance and about like from regulatory perspective. This is another topic that is just getting started, that regulators are actually catching up what is happening in the digital space. And we are fortunate in Germany that it's quite progressive, that digital assets are recognized already. However, that's not the case for other countries, and definitely there is tons of challenges there. So like from technical perspective, because I'm mostly responsible for technical integrations in our products. Thankfully, like with Stellar, it's pretty straightforward, but definitely like the most difficulties and the most hurdles at the same time. The biggest opportunities are in compliance regulatory requirements.
Got it. So it sounds like compliance and regulatory, of course, are there even in progressive markets like Germany, but also dealing with perhaps legacy tech stacks at your banking partners can also present some challenges.
Absolutely.
Ladi, I'm curious to hear which of these factors has posed the greatest challenge to you. You as the COO of the company probably are the first in line to deal with some of these issues. Wondering, what has been one of the greatest challenges for you so far?
Yeah, thanks. For us, definitely compliance, regulatory and compliance. There are so many rules in different regions that we have to try and meet. We never thought it would be so difficult. We honestly thought once we figured out the technical aspects, we thought we could get up and running, but then we realized that the challenge of compliance, we really needed to get our heads around to figuring it out. So I would definitely say compliance has been the biggest hurdle for us to overcome. Luckily, we are actually overcoming it now that we've set our minds to it. So that would be our biggest challenge. Technical integrations has been quite smooth. Getting onto the Stellar network is pretty straightforward. And luckily, here, the banking environments, they're pretty, would I say, up to date with digitization. So that wasn't so much of as a challenge. So I would definitely say it was compliance has been the major hurdle for us to cross. But yeah, we're doing it right now. Yeah.
Got it. Well, it seems like you're doing it quite well. Tomas, curious to hear from your standpoint what has been top of your mind and how have you been dealing with it?
Well, starting with the easy part, let's say. It's not easy, but it goes very well, which is the technical part. And well, SDF has a lot to do with being easy and being smooth. And Stellar is a great technology, helps a lot. It's very straightforward, even when you have to connect the different business partners. So this is very good. Of course, it's very important to be done very correctly, but it works well in general. Now, compliance wouldn't also, it's after regulatory part is solved, compliance quite comes in place. Still, the difficult part is the regulatory part. Because in my experience, what happens is that even when you have, and we have in the case of central bank in Brazil, a forward-looking and a changing regulatory to move to a more competitive and a more, not really decentralized, but a more digital and a more efficient ways to do things. Even then, it's just because of the nature of regulation shifts, it's hard to predict. It's hard to say, okay, there's a good view that regulation will be pro-business, still business in Brazil, whatever. Even then, if it happens in 6 months, is one thing. It happens in 2 years, it's a completely different thing in business perspective. And regulatory-wise, this could be indifferent, like 6 months, 2 years. Maybe it's this process. It just takes because so this is part important. And also remember that we're talking about regulation in Brazil and elsewhere in general. Of course, when it's just fintechs in Brazil, is only in Brazil. But if we're talking about anything cross-border, it also involves how the regulation changes in other places. So is Europe changing the e-money license? Is UK setting new rules for stablecoins? And they are, by the way, all changing this. Is CBDC coming? And if it is, how do we integrate with CBDCs? And all those things are very hard for you to cope in the sense of, okay, we can talk about it, we can discuss the probabilities, but making a business on those things, that's the hard part. And remember that since we're doing B2B, part of what we do is we cover and try to remove the hurdles for our partners who do not know Brazil, sometimes who do not have the total insight of what's going on in Brazil. So we have to do that a bit with them and for them. So we have to also not take our only local perspective, but put ourselves in the perspective of the others that are looking at Brazil. So for all those reasons, regulation is the real game changer. And I think it's gonna keep changing. Technology is far from stopping to evolve. We see on Stellar, we see lots of protocols which will be a very good change. We see key recovery. That's a huge change. That's a huge benefit that everyone should enjoy. And this will have changes in the whole chain of products and services. And this is far from stopping now. And regulation, as Rob put, has to catch up. Even if the regulator is trying to catch up, when and how they do that, being incognito, this is the tough part. But
got it.
Now the others, we can deal with that.
Yep, that makes sense. So it sounds like the changing and dynamic nature of the global regulatory kaleidoscope is one of the things that you think about a lot in terms of how to manage both in your country as well as the countries of the partners that you're working with. I'm curious to hear from each of you, from a purely practical perspective, day to day, how do you allocate your time? What parts of the business that we've just touched on between technical, regulatory, compliance, customer service, partner engagement, how do you allocate your time among these factors? Jarek?
Compliance most of the time.
That-
Preparing infrastructure in preparing infrastructure in a compliant way. It's a big topic. Going to meetings with, like we are, in fact, I'm complaining a bit, but we are in a lucky situation because since we are working for banks, they are handling most of the heavy load, and we are simply, listening what compliance has to say and just implementing this. We don't have to figure out things like how to build things in response to regulations.
Mm-hmm.
However, since we are dealing sort of in these both worlds, like from one side regulatory, dealing with regulatory requirements, and as well like managing things so they are like usable from user perspective, we are in a lucky position where we can actually influence the regulation as well. At least in Germany, it's very open, and I can say only good things about regulatory body catching up, and they're really listening to people who have practical experience with blockchain tech. So hopefully it will move forward quite quickly, and then we'll see other assets jumping on board as well, and then we will have even more work in integrating new kind of assets.
Makes
but yes, wrapping up, it's mostly mostly preparing infrastructure in a compliant way, definitely.
Right. So if you're not thinking directly about compliance, then you're helping your banking clients, helping to enable them to meet the compliance requirements that they face in their markets.
Yeah.
Ladi, you mentioned previously that compliance is top of mind for you. Is that what you spend most of your time day-to-day looking at?
No, not really. My day is spent mainly managing our clients. Onboarding clients in a compliant way, managing current clients. There's a lot to do with rates. Rates fluctuate a lot in Nigeria. So there's a lot of communications about rates, status of their transactions, requesting KYC documents for clients who are onboarding, or just answering inquiries that customers mainly have, or trying to acquire new clients. So most of my days spent around client management. Luckily, we have a very competent technical team, so we never really have technical issues per se. So it's mainly about managing customers and developing business out, fleshing out newer services, and looking to the future, basically.
Got it. I'd love to explore this a little further. I think this is a really interesting point, which is there's two aspects that we strive to streamline here. One, of course, is the technical interoperability, or the technical integration between two partners. That's something that the Stellar network directly seeks to streamline. So any one of the anchors we have represented here should, through the Stellar network, be able to seamlessly connect with the other from a tech perspective. Of course, today there's still some bilateral agreements that need to be entered into on a business level between anchors. And Lottie, I'm curious from your perspective, do you foresee a future where both of these things are fully streamlined and almost completely automated? So not only the technical interface between anchors, but also on a business level? Do you see a world where this could be largely automated?
Yes, I do. I do believe it's not too far away. But I would think there would be need for some sort of anchor verification program. Right now, it's easy to just come on to the network and be an anchor. So, but if there's a way of verifying anchors that are regulated in their regions, that have gone through all the necessary things that need to be done, yes, I think it's very, very possible, because the main friction between partnering with anchors is making sure you have the right anchor that can do what he says he can do, or they say they can do, and are regulated and are legal entities. So I do believe that with some sort of anchor verification program, it's very possible that that day will come.
Yeah, that's certainly something that we spend a lot of time thinking about. How can we make the lives of our anchor partners easier so they can better serve their own customers? Tomas, what do you spend most of your day thinking about?
Customer service, especially considering that we're servicing platforms and they always have to be on top of the best information. Do they have all the information they need to develop their business? Do they have all the inputs on the technical side and integrations that are going on? So it all starts there. For us, it has to be really top. And that's something that we can be more active on, so we can make sure there's no gap and they really are on top of everything. Now, on the regulatory side, that, as I said, it is very important, it's critical, but sometimes it's more a reactive part of my day, because it can happen that there's a public hearing on changes on FX rules in Brazil, but the public hearing is out. It won't be any change in the next few weeks, and then suddenly a bunch of new rules are out, because that's how the regulation resolves and issue new rules. So that is something that, when it comes, it's critical, but it's less programmable. It's something that it's not something that you can make your whole day around it, because it's not always like that. The technical part also involves around customer service. We're always trying to improve integration, the SEPs that everyone who deals with Stellar knows very well, but there are protocols that facilitate automating the conversation between business. And they help a lot in making compliance easier and making transaction information easier. So it's always good to be on top of new protocols and see how we can automate process of doing business. But this is something that, in part, there's some developments we do on our own, but usually it's something always integrating with the customers and that part. So mainly, it's always focusing on how can we make sure that the platforms that are using ours and their customers are having top service and have best possible service solution that it is. And from there, we can start looking at other things.
That makes perfect sense. Yeah, and that echoes a lot of the same thoughts that Lottie put forward as well. It's interesting to see the common threads between anchors in different parts of the world. I'd like to shift now to take a look at some of the questions that the audience has been asking. One of them actually coincides with a question that I had in mind to ask you as well, which is, in all three of your companies, either directly or indirectly through your clients, are representing fiat currency in a digital format. In some areas of the industry, this is known as a stablecoin. In others, it has different meanings. But in any case, I think most people would agree that we're at the inception stage of this. A lot of the action is between the banking system and the digital rails, the interaction and interface between those two systems. Ultimately, do you foresee a future where stable coins or digital representations of these fiat currencies are part of the economy to such an extent that the interface between the traditional banking system is no longer as necessary? And if so, what do you see as the future of traditional players in the financial infrastructure? Jarek?
Thanks. Yeah, so I guess we have a short time for stable coins before CBDCs come along, and they'll essentially serve this like universal national currencies purpose. But I think like the main role for banks in this developing digital tokens age is simply distribution. They have relations with clients. Probably it won't change that much. And essentially by providing digital services to their clients, they will just upgrade the whole experience. Of course, we have like the whole area of possibilities to unlock new types of financial instruments and new types of finance, like what we can see in DeFi, for example. It's happening already. So yeah, it's just a matter of on-ramp, I think, and stable coins as issued by banks is just one type of on-ramp, and everything ends up in digital form.
Yep, that makes sense. Ladi, how do you see the role of banks and the traditional financial system looking like in 3 to 5 years from now?
Yeah, similar to Jarek, I feel it's good. It's a channel. It's a distribution channel. I think they'll open up more to fintechs to offer services to their customers. I think I'm already seeing that in Nigeria. A lot of banks are open to having third-party services being offered to their customers. So I think they realize that there's an openness to technology that they can't really avoid. So I think they'll just end up playing in an open way.
Excellent. Tomas, curious to hear your thoughts as well.
Well, I think there's gonna be some more differentiation on the service that are more vertical today, and we could see some decoupling of service. For instance, do necessarily payments are so concentrated on banks as they are today? I don't think it's necessarily the case, and I don't think it's a threat for banks. If fintechs can provide services that are more efficient to banks in terms of payments, for instance, there will be more business for banks to finance. So not necessarily as a threat. I think that the more efficient the market gets, and it will get as it gets more digital, the more business there will be in the whole. So let's say if you're talking about, okay, so half of the payment system services are provided by fintechs in a few years. The overall will be much more than double the current market. So business will have, banks will have lots to do, for instance. Now, to the question of CBDC, this is very complicated because it's unclear right now how CBDC would play along. Would CBDC be something like a synthetic stablecoin, but let's say regulated by central banks? Or would be something that banks can issue as they issue money in terms of fractional deposits? Or is it something more radical, like central banks would be accepting accounts straight from peer-to-peer or individuals? I don't think it's going to be likely the case. So the idea here is that even if there are CBDCs and banks are doing more services, and services of payments are provided by fintechs, there's much more layers of possibilities. And also, if you think of CBDCs, they cannot be servicing everyone everywhere. It's just like thinking that central banks are doing ATMs. It's not, you know. ATMs are being done by private business, I think, everywhere. I would guess everywhere. So, and it's not something that central bank, no, I'm the only one who can print money, so I'm the only one distributing money. It's not like that. There's lots of services.
Sorry to interrupt, Tomas. We are out of time, but I really appreciate all three of you joining us today and sharing your insights. And for ultimately connecting the Stellar Network to the global banking systems that you each represent. And we're really excited to see the cost-efficient financial services that you're able to offer the world as a result. Thank you very much.
Thank you.
Thank you, Boris.
Thank you.
Back again. And thank you again, Boris, and to all of the anchors that joined that discussion. Really interesting insights. I think we're really just at the beginning for what business models look like around anchors, but in my opinion, the future is incredibly promising. So, you know, again, I would like to highlight that Stellar anchors are really something that differentiates the Stellar network from other chains. And quite honestly, our open anchor ecosystem is something that differentiates us from many global payment networks. So it's an incredibly valuable component of the Stellar ecosystem and something that I believe will power hundreds of fintech apps from all over the world in the not too distant future. If you want to learn more about anchors, you can do so by joining our Friday roundtable discussion. To join this discussion, you should go to the interactive sessions tabs and make sure that you sign up. Now, we've got another concert from the Amazing Roots, along with a quiz in our last session for today, Driving Diversity in FinTech. Stay tuned, we'll be back soon.
And yes, y'all, you're still in tune to the sound. Once again, it's the sound of the legendary heavy foundation. And I'm touching your mind. Yo, you know we reppin' for the fifth down, and you don't stop. Keep on. Hey, you listen and stop what you're doing and set it in motion. This is the next movement. If you listen and stop what you're doing and set it off for me all. You know what? It's the hot music, the hot music, the hot music, hot music, the hot music, the hot music, the hot music, hot. Yo, you go 1, 2, 1, 2, 1, 2. That's how we usually start. Once again, it's a start. It's the Philly Dolly Line, my prime minister thought. It's directed to whoever's in listening range. The whole state of things in the world about to change. Black rain, falls from the sky, look strange. Together with Van Hop, 7 on plane. Man, it's inflation on the price of fame. It was all the same. Then the Philly boys came. Black thought, ill, syllables out the fifth. This heavyweight rap thing I'm about to lift. Like a father that from the sea to sunlight. I just rug on the mic and I draw like a gunfight. Never use a cordless, on stand applause. Champagne from ill silver goblets. I'm a boss of monopolies of all that. Know where to cut this tap? You gotta get wet in your hands, stop but I ain't saying. Hey yo, get to the next movement. Get on up. Get on up. Get on up. Check it out now. The legendary foundation. Right? You don't stop. Keep on. disturbing you with it. Some of you probably never heard of this, or don't have the time it is. Got that root to work or to comprehend, whether they skylight in your name or you anonymous. You be speechless, stinging sinuses, royal highnesses, through your minuses. Look at my counters, I blow out the cloud of kiss. Yo, go competition, we rocket it. The finalists, I'm sounding like a rugged amethyst. Then at your music compliments, I am the planner. Listen close to my poetry and examine it like an analyst. See if you can handle this. You got to groove, MCs, free.
Wow, the Roots really know how to put on a show. They are so awesome. It's definitely leaving me energized, and I hope it's energizing you all for this next quiz question. This is the last question of the day and also your last opportunity to win some Stellar swag. So the question is, what is the mission of the Stellar Development Foundation? I'll be right back with your answer. All right, welcome back. So who knows the answer to our quiz question? I do. The mission of the Stellar Development Foundation is to provide equitable access to the world's global financial system. That's why this theme of inclusion is so important to us. And this next session is going to dive into how we can further inclusion and diversity in our industry and the broader fintech industry. It's actually interesting because research shows that more diverse companies are more innovative and typically more profitable. So why is it still so difficult to find diversity in tech? Stellar Development Foundation CEO Danelle Dixon has an awesome panel lined up to talk about this exact subject and the path forward towards greater diversity, what's worked so far and what still needs to be done. So with that, I will hand it over to you, Danelle.
Thank you so much, Lisa. This is, I have the great pleasure of speaking with some super talented leaders in our space and also just in tech generally. And it's about a topic that's so near and dear to my heart, and that I just feel like we have come so far, but have so much further to go. And that's a lot of what we're going to talk about today. This is still a challenge in tech generally, and in fintech in particular. And it's not rocket science that diversity and inclusion are two of the most important things that we need to be able to bring into the fold. So what I want to do is I'm going to allow the panel to introduce each of them to introduce themselves. We have Lin Hua Wu. We also have Dr. Anino Amua. And then I also have Clev, and I want to get her name said right, Mesador, right, Clev? I'm hopeful, like I think I got that right. But I want to have each of you introduce yourselves. And what I wanted to do was actually, when you make the introduction, if you could just also tell us about what the last conversation that you had about diversity and inclusion, other than being on a panel, was, and why you actually had it. So Lynn, let's start with you.
Hi, Danelle. Thanks so much. It's really an honor to be on this panel with all of these wonderful women today. I am the Chief Communications Officer of Dropbox. I also have the pleasure and honor of serving on the board of SDF. And before Dropbox, so at Dropbox, I run internal and external communications, our brand marketing, and our analyst relations functions. And before that, I was at Square. And a long time ago, I started out as a lawyer. So I've had a couple of diverse hats. And the last conversation I actually had about diversity was yesterday evening, right before bedtime, with my twin 9-year-old girls, who said they talked about in sports class what it meant to have a boys sports and a girls sports, and why the teacher, to her credit, said that there weren't such things as girls and boys sports, that they were both equal, and that that boys and girls should be able to take part in dodgeball just as much as, you know, that everyone should be able to. So it was last night.
Wow, that's a great one. Those are the kinds that I have those conversations. We have 5 boys in our house, and we have them all the time. Yeah. And I love that we get to do that. So Anino, it's so nice to have you here, to be back on a discussion with you. And I'd love to hear your introduction and also your story.
Hi, Danelle, and thank you very much for having me here. It's wonderful to be here with all of you. And well, my name is Anino Amua. I am the founder and managing director of Avondis Consulting in France. It's a strategy and financial advisory firm. But in addition to that, I also run communities of women in business leadership. And I also run, or at least I started off a network in Nigeria to do with women in fintech. That's the Nigerian branch of an African fintech network. In addition to that, I think that I sit on several boards, and one of the conversations that really stood in my mind talking about diversity was when I was interviewing on a panel last week or 2 weeks ago, a founder. Now, this founder is originally from Africa, now living in America for many years. Her name is Mary Spayo. Now, Mary is a founder in virtual reality, and she started out her career as a deep space engineer. And through her career, she found that she was able to create a digital platform. She innovated a digital platform which would allow creatives to distribute all their work across the world. Now, the point about this was I had asked her what marked her as a woman in tech. And she said to me, well, it wasn't so much a woman in tech. I don't think it was anything to do with gender. She said, what I brought to this was my knowledge and my diversity of my experience. I'd lived in Africa and I knew that, African creatives could not distribute music and film and all of that in the way in which it was being distributed. It was far too expensive. And now her innovation has created this digital standard around the world globally. So I think the point is that diversity is good, but talent, there is no gender a talent has no gender. And I think that that's really what struck me.
That is so awesome and so true. It's one of the things, if we continuously bring in diverse backgrounds in terms of what people's experiences are and focus on regional experiences, it actually brightens everything and makes it so that we can understand differences across the globe. So thank you for that. And Clev, you have done so much for blockchain just in terms of bringing these issues to blockchain. Why don't you give us your introduction and then also your story?
Well, thank you for leading this conversation and allowing me to participate. I lead the National Policy Network of Women of Color in Blockchain. Last year, we actually brought about a delegation of 25 women to Congress to meet with members to show that women of color are building in this space. I also run a startup, Logos, but previously, I actually worked in politics. I was a presidential appointee for the Obama administration, where I worked at the Department of Commerce, leading public affairs for one of the agencies. So it's been a thrill to marry my political background, my economic background, with the work I'm doing within crypto. And certainly, diversity and inclusion is an important topic for me. I recently published a book that focuses on my time in politics and my time in crypto. And the focus is really on equity and inclusion. So it's interesting. I recently had a conversation with a few friends and we were talking about the fact that it's the 21st century and it's the dawn of the fourth industrial revolution. We are still commemorating first, right? We have the first female vice president. We even have the first Black astronaut that's going to have extended stay on the space station. But it's interesting that these things are really happening, right? What exactly is the achievement we're celebrating? And it was interesting because I thought that for some people, right, they're proud to see themselves reflected. Somebody who looked like them was finally getting the recognition that so many did not get, so many were passed over for, so many were denied. But there are some in this world, in this country, when they see it first, they're celebrating the fact that they actually think this is the first time somebody qualified from that group is being recognized. So two different perspectives, but it goes back to the point that there are so many barriers that impede talented people from succeeding, and that's why diversity and inclusion initiatives are so important, because if we're going to create an inclusive economy, we're going to have to make sure we're having these tough conversations, because diversity and inclusion is not easy at all.
Well, thank you for each of you for those introductions. I knew that I couldn't do them justice, and I'm grateful that each of you agreed to do that for yourself. So let's just jump into the topic. Clev, could you give us the definition of diversity and inclusion? How should we think about that from this standpoint?
Yes. So everyone defines diversity and inclusion differently, right? So for the purposes of this conversation, I know we'll probably be talking about the workplace, the marketplace, and the workforce. But for me, diversity is about our humanity. It's about the interwoven tapestry of our similarities and our differences. Inclusion actually focuses on the culture, right? The environment that actually creates a space for people to feel that they belong. Diversity includes race, age, religion, gender, socioeconomic status. There's also the differently abled, Native and Indigenous groups, as well as the LGBTQ non-binary community. Demographics also plays a role. We know that about 45% of this country, of the US, are people of color. But if you drill down a little further, actually last year, for the first time, more than half of the US population of people under 16 years old identified themselves as persons of color. And of that group, 40% of them were Black and Latinx youth. So when you look at, the opportunity for inclusion, the innovation economy we're creating, the next generation of leaders, they're very inclusive, which makes the case for making sure that Black and brown people are included, but that we expand our definition and we make sure that we're being inclusive and looking beyond just race, gender, age, socioeconomic status, and religion.
I do think that you're right that the next generation has gotten this a lot better than I think that we did. And I think maybe we've helped pave the way a bit, but I love the hope that brings. Anino, the tech sector clearly has had challenges with respect to diversity and inclusion, and fintech is no different. I know you and I have spoken before about a lot of the issues that we've seen in fintech. And are we getting better? Are we moving in the right direction? Are the numbers actually improving? How does that look to you?
The numbers are improving, yes, but like everything else, it's a little bit too slow. And I think that if we try and look at some of the causes and some of the issues surrounding fintech, similar to what's happening in the tech sector and similar to what's happening in the finance sector. But in the fintech sector, it's actually even worse. So for example, when we look at the top leadership, we look at boards and only 14% of boards are women. If we compare that to the banking sector right now, which is about 23%. But you look at the workforce in fintech and it's about 30% women. But at senior roles, it goes down to 17%. And of course, fintech is new, is about innovation. The sector really started to grow after the crisis in 2008 and 2009. So it's all about innovation. And when we look at innovation, in terms of founders, only 5% of founders are women. And one thing that we know clearly is that when people react to seeing people like us. And so when it is perceived that it's not an industry that is for women, especially at leadership is always key and is always important. And that is one obstacle. So, and then we get to a situation, I'm sorry, which is not very pleasant, but it then looks as if you have fintech products that are products made by men for men. And so even on the user side, are those products actually products made for women as well? I'll give an example, and we don't have enough data in terms of the usage of certain products by gender. But for example, when you look at financial management apps and look at how much they're downloaded, they're mainly downloaded by men. Why shouldn't women be downloading financial management apps as well? So these are some of the issues, and I'm sure we'll talk about the solutions a little bit later.
Yeah, I think that this is one of the issues. I actually, I was so gratified. I was recently hiring or finalizing the process for a VP of engineering hire. And one of the candidates who I really, really liked, she actually said that she only interviewed with us because we had a female CEO. And that to me was like that's exactly what we want. But at the same time, we shouldn't have to have so few female CEOs out there in blockchain and fintech. So Lynn, I look at the world and I look at all of these issues that are out there. So grateful that you are in a leadership position with us on our board, and so provide us so much wonderful guidance. And I wondered, and this is prompted by a conversation that we've had before. Does COVID and the remote working environment that we've moved to, is that helpful in creating more diversity and opportunity with and inclusive ideas with respect to technology and fintech in particular?
I think it could. And so the jury is still out a bit, right? Because we're all in this and still in the middle of it. And it's unprecedented. So I don't think we have the data yet to show it. But if there is a silver lining, and it's obviously a horrible pandemic that we're in, that's a terrible thing for humanity to have to live through. But when I think about what we're doing at my current position at Dropbox, we are thinking a little bit differently. It's opened up our mind in terms of remote and distributed work. We have hubs where we have most of our employees around the globe and around this country. And we've announced a new model where we're allowing people to have more flexibility in terms of where they work, where they move to, and thinking about other hubs. And so my view is, if people do this right and put thought into it, the remote work environment should be beneficial in terms of diversity and inclusion. Because, for example, if you want to retain employees as they go through their life's journey, right? Some people think the Bay Area, for example, is very expensive, because it is. And this might not be sustainable. So you end up losing people who maybe didn't come from such wealthy backgrounds originally, right? I grew up in a very small town in Minnesota. And I remember as a child thinking, my father was a professor at the University of Minnesota. And I remember thinking about diversity as the farmers' kids and the kids who were from single parent homes and the kids who didn't really have any money. And that is like the socioeconomic kind of diversity. But I also knew those kids were really, really smart. And as we aged through the high school system, the separation became greater and greater, right? Those kids were out like harvesting and doing those things. And so I think if we're moving hubs away from some of the larger metropolitan areas and thinking a little bit more openly about schools we can recruit from and where people can live, there are areas of the country that are going to be more friendly, for example, or more welcoming, or African Americans, Black people will feel a sense of belonging, because we know in San Francisco there's a small population. So I do think it can be a boon for retention and for just opening up people's minds about a bigger pool of recruiting.
Yeah, I think that it's one of those, we always have to think about where we can open up the floodgates a bit, and to create that, what you said, and like having people look more like you and in these roles. And I think that coming from various different geographies definitely helps. Clev, why? This is a question that I know it might be simple in our minds, but why is it so important that we have diversity in crypto and fintech? You have to unmute. I'm so sorry.
So sorry. Yeah. Well, the problem is difficult, right? It's deep-rooted, and it's systematic. So in order for us to, when we look at, fintech and the marketplace, we've spent probably the last decade or so creating a pipeline, talented, skilled, diverse innovators, and we have to make sure that there's opportunity for them in fintech, in crypto, in tech in general. And also, we mentioned, product design bias. That's a real concern. But also financial inclusion. We know that globally, 1.7 billion people are either unbanked, underbanked, or lack access to basic financial services. In the US, that's about 55 million. We have to do more. COVID, as was mentioned, exposed this fault line, right? During a lockdown, how do you get stimulus checks to people in need? So we identified, this fault line, and crypto is definitely, in my space, is definitely, has an opportunity to help close the financial inclusion gap. But I will say there's a blind spot, right? So in crypto, we've created the wallets, we've created the digital assets, but the blind spot is financial literacy. For most communities of color or marginalized communities, they're not just going to just get a crypto wallet. So I'm actually working on a project that would leverage the existing financial literacy centers all across the country to actually create a cold storage course that would actually be completed at these centers. And when people graduate from them, they would get their first cold storage wallet. We want people to have access to as many options as we can to actually close this financial inclusion gap. But we have to make sure people are educated, people have the tools, but we have the infrastructure in place. These financial literacy centers are explaining to people the difference between buying something with cash, check, or credit card. Let's add digital money to that mix as well.
That's such a great idea. And it's absolutely one of the things that it's really hard to educate out of context. And I think if you can educate in context from any user standpoint, then it actually opens up the marketplace for everyone. Anino, so we talk about like your story at the beginning is something to me that I constantly try to hammer home to my team, because I think about can we actually sit in our bubble in the Bay Area or in New York and actually build these tools when we're focused on financial inclusion? Can we build them for folks that we actually don't get to see and talk to every day and understand their experiences in these regions? So if we're really trying to work towards building organizations and networks that represent the interests of all of our customers, how do we do that, Anino? Like, how do we make sure that we're bringing everyone into the fold and that we're actually not building a product by men for women?
That is absolutely an excellent question, and thank you very much for that. If we look at a lot of the innovation that has happened, in the tech space, so we look at, the Facebooks and the Googles and all of that. These were innovations made by people who experienced a particular need. Look at Facebook, for example. So they were innovations that were made by people, and they had said, we can see this need. Now, for financial inclusion, for example, financial inclusion is not people like us, okay? It's people out there. It's the 1.7 billion people that Clev mentioned, and they're not like us. And that means, and by the way, the 1.7 billion people, 2/3 of them have mobile phones. So they are accessible. And mobile phones and mobile payments were responsible for getting getting rid of most of financial exclusion in East Africa, in Kenya. So when we talk about a business case, we're already saying that we have the platforms to reach these people. Now, so if they're not people like you or people like us, where are they? You have to do what the researchers do. You need research, ethnographic research. You need to go out there. I'll give you a little case we had in Nigeria. A firm I'm working with, they're doing amazing innovative stuff in financial inclusion and all of that on biometrics, etc. And we're talking through the product and everything. And I said, so have you seen the users yet? And go out to the markets, go and sit in the store for a week and sit among the people. So you need ethnographic research and be amongst these people. Okay, so if you're a man, you can't be a woman, right? So get the women on your team, for goodness sake, So you need to be out there, you need to do the research, you need to understand the barriers. There's some barriers that are impossible to understand without being there. A brief example, when we look at, for example, women in markets. And one of the barriers is that they're in markets, they probably have childcare, young children. They can't afford to go to the access points. So the banking service has to come to them, for example. So that is it. You need to be out there, do the research, and be amongst the people who need the services. So I think I'll leave it at that.
I think that is so important. And I also think that, when we talk about diversity and inclusion, so many people jump to the gender issue, and it's just not about gender. And so I feel like this is, part of it is, of course, because we want to be able to have everybody represented, but it's just about regional differences. It's about socioeconomic differences. It's about gender. It's about race. It's about so many different pieces of it. So Lynn, when we're focused on what steps that we need to take in order to see returns on investment in diversity and inclusion, what would you say that the most important 2 steps that we need to take are?
I think number one, there needs to be a deliberate decision among leadership of any organization or company that this is something that's important, that it is important for the business, right? Until then, it can't be lip service. It really needs to be, this is important for the business and for our competitive advantage for the future. So there needs to be alignment on that. I think the second part is there needs to be then the necessary resources put against this. And I don't mean throwing a bunch of money necessarily at certain programs or projects, but there really does need to be some thought and commitment put into this, right? So whether it's an OKR or an annual goal you have to increase diversity, but it really needs to be thoughtful and I think all encompassing, right? It is how you show up to the world, your organization. Are you highlighting a diverse, panel? Are you highlighting in your messaging? Are you being inclusive in the way you talk? Who are the leaders that you're highlighting and how are you going about recruiting? Where are you recruiting from? So I think it's a decision that is actually based from leadership out of the business needs and then commitment to that in some kind of a plan. So that's what I would say the 2 most important things are. And without that, it is really just lip service.
Yeah, no, I agree. We have a question from the audience from Lisa, and she says, is there a board of advisors available to entrepreneurs who want to help getting started to meet our shared goal for diversity and job creation? I actually don't know the answer to that. So does anyone? If there's not one, we should create it.
Yeah.
I think that there's a
Good
lot of
idea.
information out there. I think that, but I don't think that there's a board of advisors. So I think that that is something that, you know, if we could actually create something around, if something could be created around putting all of this information together, I think that would be really useful. So we have just a few more minutes, but I would love to end with each of you. And I'm going to start with Lynn first. And I want to know, Lynn, how important is it that we get this right? Like what is at stake here?
Well, as we've heard from our panelists, right, the future is diverse, and it's not going to get less diverse, right? When we're talking about gender and age and race, I mean, all of this, the customers at whatever your organization is, whatever you're doing, right, whether it's product or services, you need to stay competitive and build for the future. So this is a problem that whoever cracks this nut and really creates a sense of belonging, it's not only a more rigorous process to create that service and product, but it's actually a competitive advantage. So I think it's critically important.
Clev, same question to you.
Yes, it's so vital. Again, we're creating this innovation economy. The world is younger. They have more technology at their disposal, but we still have old problems that we're trying to solve. You know, regardless of the organization, you know, from the top of leadership, there needs to be a buy-in investment that this is important, because as we just said, the return on investment is there. We need more diverse people, voices, and also products as we create. So, you know, the stakes are so high right now. And going back to the person who asked the question, I do think there are so many resources out there and a lot of case studies for when it didn't work, right? When there was investment in diversity and inclusion and the return wasn't there. We can learn a lot from it, but this is hard work and we have to keep at it. It's important, it's valuable, and it's critical to where we actually take the economy next.
And Nino, same question to you.
Well, we live in a world of innovation, and we also live in a world of big, complex challenges. And this is a knowledge generation. And it's so important because, you know, those challenges and those solutions that we need can only happen when we have all the talent available to us. So that's the first thing. We need all the talent available to us, really. The second thing is, you know, a lot of what we're trying to do in the financial sector is trying to undo, you know, what has been there for hundreds of years. It's hard work. We don't want, you know, generations to try and undo all the work, you know, all the bad work. Now, so that means right now we're the beginning of an industry in the fintech, in the emerging technologies. Now's the time to do it, so that in 200, in 500 years time, you know, we shan't be talking about this anymore. So build it right from day one, I think is the point.
I am so grateful that there are leaders like each of you out there that are focused on this issue, but also just focused on getting tech right and getting it right for everyone who's a participant. So thank you. This could go on forever because I could just sit here and talk to you guys over coffee and have fun with that, but it can't. We have to close. So thank you for your time and attention always on this and every other topic that you each lead on. And so grateful that you spent this time with us at Meridian. Thank you. I'm gonna go send it back to Lisa.
Thanks, Danelle.
Thank you, Danelle.
Bye, everyone.
Thank you, ladies.
All right. Well, what a powerful discussion. I really appreciated that comment at the end that we live in a world of complex challenges and we need diversity in our thinking to come up with the right types of solutions. I don't think that could be said any better. So thank you so much. Thank you, Danelle, for leading that discussion. And as a reminder, if you missed any of today's sessions, you can watch them online. All of the videos from today as well as yesterday will be uploaded on the Meridian site in just a few hours. So feel free to dive into those if you want to watch them again or if you missed any of today's sessions. So we've got some fun activities planned for the end of our day 2 Meridian. If you're into marbles, you can head over to Twitch and play with some of the Stellar community members. And if you're looking for that link, it's in the interactive sessions tab under Tuesday. Tomorrow, we're going to be diving deep into policy and governance, the regulatory future of blockchain, how we work with global policymakers to make blockchain a success, and what we can expect from CBDCs, some really big and important topics. The day will kick off at 8 a.m. PST with our third day of Meridian keynote speaker, Jim Kim, former president of the World Bank. It's been an honor again to spend the day with you, and I will see you bright and early tomorrow morning. Take care, everyone.